Let's get more on finance and economic news. We're joined now by Suzanne Haddan, who is the Managing Director of BFG Financial Services. Welcome, Suzanne. It's great to have you along this morning. Let's start with the retail sector, Suzanne, because we're seeing a real mixed bag there. We've seen yesterday that news that Wesfarmers was shutting up to 75 Target stores and converting another 92 of them to Kmart's. But we've also seen that retail sales plunged after the panic buying dried up. But then we've also seen a boom in online shopping. So we're sort of seeing a mixed bag, but also a bit of a reshaping of the landscape.
Absolutely. As far as the online sales, I mean, they're up 20% and they make up now 10% of the retail sales. And after a nearly 18% drop in April, it's quite a concern. But some of the transactional data that the banks monitor with the credit cards and other spending habits suggests there might be a pickup in May. And that's likely to be the case if we continue to be able to open up our economy again. But as far as the Target stores, one of the issues there is, first of all, potentially 1,300 jobs lost. And also it's hitting a lot of country and regional areas because Target country is almost like the department store for regional Australia. So great disappointment there. And Wesfarmers, which is the parent who owns Target, are saying that middle area isn't doing well in retail. People are either shopping the very low cost or the expensive, or they want something ethical and sustainable, but certainly not good news for the economy overall with retail sales.
With your eye on the economy and business sentiment currently, just looking ahead, do you think more retailers will go the way of Wesfarmers as well?
Unfortunately, I think we're looking at a scenario. It'll either be adapt or die for some of them. With the increased focus on online, there's some sort of a scramble to get their offering competitive, but we're also seeing the consumer is not really wanting to open their wallets, and which is understandable in the current environment. And if confidence is not injected into the economy, there are going to be more retail sectors that suffer. And certainly you're seeing it with so many vacancies just in local shops that I'm observing around Sydney. And I think that'll be an Australian story.
On another issue, Suzanne, we know that elderly people are particularly vulnerable physically to the coronavirus, but they're also particularly vulnerable at this time economically as well.
Well, one of the issues, they're living many off their savings, maybe with some assistance from the government. And the important thing for that group is to make sure if they've got their assets set up, some cash, shares, property, is to hold their nerve. If they were comfortable with how they set up their finances a few months ago, now's not the time to say sell their shares and move to a cash account or a term deposit paying 1.5%. The other area that group can look at is more retirees are probably eligible for the age pension because assets have dropped and the deeming rate has also dropped. So the first thing is they need to check their assets to see if they could get some age pension, because even $1 of pension gets you the sought-after pensioner concession card, and that gives you a lot of discounts, plus it gave you $750 a couple of months ago and another $750 from the government in July. Now, for the self-funded retirees that don't get the age pension, they're just seeing their dividends drop, their interest drop, they could at least look at the Commonwealth Seniors Health Card. No asset test, only income test. And while it's not as good as the pensioner concession card, if they get it by 10th of July, at least give them the $750 from the government to give some assistance to households.
Some good advice there, Suzanne. Thanks so much for joining us this morning. Great to see you.
Thank you.